10 years ago today, Lehman Brothers, one of the US oldest and largest banks, collapsed. The bank had $600 million of assets on its balance sheet, making its bankruptcy the largest in American history. We all know what happened next. Many of the so-called assets that banks held on their books were the mortgage-backed securities and collateralized debt obligations created by splicing together good and bad mortgages into securities that could be traded on financial markets. When people started to default on their mortgages, no one knew what was in these securities, and their value collapsed. Banks panicked and stopped lending to each other. Had the state not stepped in to bail the banks out, the trouble wouldn't have ended at Lehman's. Whilst we've clearly failed to learn many of the important lessons from the financial crisis, it's unlikely to happen again in our lifetimes, at least in the US or the UK. But focusing on this point obscures a much more fundamental problem. Because 2008 wasn't just a crisis of the transatlantic banking system. It was a crisis of the financialized growth model that the UK has been pursuing since the 1980s. Since Thatcher, corporations have been much more focused on maximizing shareholder value rather than paying workers or investing in long-term production. This has had a knock-on impact on people's wages. The wage share of national income fell 10 percentage points through the late 80s and 90s. After Thatcher's decimation of the unions, workers really didn't have the capacity to resist these changes. But people didn't feel like they were getting poorer. Increased mortgage lending by banks pushed up house prices, which made people feel wealthier. Even people who didn't have houses were able to get much easier access to credit cards and other forms of unsecured debt. When the housing bubble burst in 2008, many of these gains were wiped out, leaving people with a stack of unpayable debts. This is why the recovery from the financial crisis has been so slow. We're living in a zombie economy in which the old debts can't be written off, but new debt can't be created in its place. If we really want to solve the problems that led up to 2008, we have to move towards a completely different growth model. Properly regulating the banks is just the start. Unpayable debts need to be written off, investment and ownership need to be socialized, and our trade unions revived to ensure that the gains from growth are more equally distributed. Growth itself also needs to be rebalanced away from speculation and asset price inflation towards green, sustainable production. If we fail to learn the right lessons from 2008, then the hangover from the financial crisis may never end.